This could be the moment we look back on in history and say, that's when everything changed. Welcome to Crypto Week, the future of U.S. crypto regulation. In the span of just 5 days in July 2025, the U.S. government may have set the stage for an entirely new era in digital finance, and potentially for a trillion-dollar transformation of the global crypto economy. Let's break it all down. What was Crypto Week? From July 14th to July 18th, 2025, the U.S. House of Representatives dedicated an unprecedented week, Crypto Week, to address the murky and often chaotic regulatory environment surrounding digital assets. This wasn't a theoretical debate. This was action. A trio of groundbreaking bills were passed, reshaping everything from how cryptocurrencies are classified to how stablecoins must be backed, to stopping the government from issuing a surveillance-based digital dollar. The result? A blueprint for how crypto will be integrated or regulated in America's financial system. Bills that made history. Let's break down what was passed, what it means, and why it matters. A. The Clarity Act. First up, the Clarity Act, designed to end the regulatory turf war. For years, the SEC and the CFTC battled for control over crypto. The result was confusion, lawsuits, and stagnation. The Clarity Act resolved that debate. The CFTC now has primary oversight of crypto commodities like Bitcoin. The SEC retains jurisdiction over digital securities. Exemptions were added for decentralized protocols, potentially easing the burden for certain platforms. Reduces surprise lawsuits. Streamlines token classifications. Encourages innovation with less fear of retroactive enforcement. B. The Genius Act, guardrails for ensuring neutral and inclusive use of stablecoins. This was the centerpiece of Crypto Week. On July 17, 2025, the United States Senate and the United States House of Representatives both passed the Genius Act. And on July 18, 2025, President Trump signed it into law. The passing of the Genius Act introduces the first ever national regulatory framework for stablecoins, cryptocurrencies backed by fiat currencies like the US dollar. Here's what it mandates: full collateralization with cash or short-term US treasuries, independent audits, strict consumer protection, transparent disclosures. This makes stablecoins bank-grade and clears the runway for retail, fintech, and even Fortune 500 companies to launch digital dollars under their own brand. Unlocks billions in institutional capital. Could trigger $150 billion plus in market growth. Boosts demand for treasuries. A quiet win for bond markets. See the Anti-Central Bank Digital Currency Surveillance State Act. This bill is intended to prevent the Federal Reserve from creating or issuing a central bank digital currency to the public. Why? Proponents argue a government-run CBDC could threaten financial privacy, enable transaction surveillance, lead to asset freezes or controls. This act protects private innovation, like stablecoins, from being overshadowed by a centralized competitor. Investors' insight reinforces free market digital money, reduces fears of financial surveillance, signals U.S. preference for decentralized solutions. Market reaction. Crypto markets didn't wait to celebrate. In July 2025, Bitcoin hit a new all-time high of 120,000. Crypto-linked stocks like Coinbase and Riot platforms saw major gains. Institutional capital began flowing in. Hedge funds began deploying sideline cash. Banks started preparing crypto custody services. Builders in DeFi felt confident to scale operations. Real-world impact for investors. Let's look at what this really means on the ground. 1 point, regulatory clarity equals lower costs. Crypto companies can now operate within clearer legal frameworks, lowering costs, reducing lawsuits, and improving investor safety. Second, stablecoin expansion. With stablecoins backed by treasuries and built for compliance, expect real-time payments, global transfers, and programmable money at scale. Third, institutional adoption. Insurance funds, pension systems, and sovereign funds can now enter crypto more confidently, driving massive new demand. Fourth, treasury yield boost. Stablecoin backing boosts demand for U.S. debt, supporting treasury yields and reducing U.S. borrowing costs. 5. Smarter diversification. With more ETFs and compliance tools, crypto becomes a practical hedge in diversified portfolios. Not without risks. Not everyone's cheering. Skepticism. Some say the rally is outpacing fundamentals. Looser rules might create unintended systemic risk. Policy pushback. Critics like Senator Elizabeth Warren argue these laws benefit corporations over consumers. Others warn banning CBDCs may set the U.S. behind China and Europe in digital currency adoption. What comes next? So what's on the horizon? First recap. Crypto Week, July 14th through 18th. All 3 bills passed the House. Genius Act, signed into law by President Trump on July 17th. Clarity Act awaits possible reconciliation with the Senate. Anti-CBDC Act heads to full Senate review. Regulatory agencies will now begin rulemaking, a process expected to take 6 to 12 months. Expect hearings, industry input, and implementation roadmaps throughout late 2025 and early 2026. Investor positioning strategy. While we don't offer financial advice, here's how the big players are thinking. Bitcoin exposure remains a top hedge as it's now clearly labeled a commodity. Stablecoin builders. Watch platforms like Circle and fintechs who are integrating stablecoin infrastructure. Crypto proxies, companies like MicroStrategy, BlackRock, or Fidelity Digital offer indirect exposure. Treasury allocation. Short-term bond ETFs may benefit from increased demand via stablecoin reserves. Portfolio balance. Consider modest crypto exposure, 5 to 10%, using dollar-cost averaging and disciplined rebalancing. Conclusion. A new era begins. Crypto Week wasn't just legislative history. It was a signal that the United States, once the Wild West of crypto regulation, is finally putting on the sheriff's badge. For investors, builders, and institutions, this brings opportunity, but it also brings the need for strategy, patience, and attention to detail. Because while the rules may now be clearer, the game is about to get a lot more competitive. If you found this breakdown helpful, hit that like button and subscribe for more deep dives on digital assets, blockchain breakthroughs, and economic trends shaping the future. Until next time, happy and profitable investing.